So Lam Research. So this is a semiconductor processing equipment company. Up 144 for the 5-year. It's down 8%, as well as I forgot their main competitor, but they're also down. These guys are a $92 billion market cap company. Revenue is 15.5. PEs are really reasonable. Okay. The revenue has plateaued. They had a really nice boom in 2021. 2022 looked good. You see they have the booms, bust, boom, bust. That's the cyclicality of semiconductor. Now they're beginning to grow, so this looks good. So maybe the market is not paying close enough attention to Lam Research because they're beginning to grow. The last 2 quarters look good, but they were on a string of quarters where they were losing revenue. But maybe those days are behind them, and it's going to start really impressing Wall Street. For the past year, they're down 8%, so they've sold off. This is looking like it may be discounted nicely. So revenue is 15 billion. Let's look at those margins. So margins at 47, not bad. This is like Amazon, but that's good margins. And free cash flow looks great. And they're beginning to grow nicely. So if you look at the quarterly, they're growing 20%. Man, that looks good. So let's check the balance sheet, make sure they don't have a ton of debt, which is going to be a big problem. No, they have more cash than they do debt. This one looks good. So Lam Research looks good. It's discounted. So let's do a full valuation on this one and see what we end up with. I'm going to move this guy to another screen, and then we will open up valuation on this one. So I'm going to compare this one to Qualcomm. Not exactly a Qualcomm, but Lam Research maybe sells to Qualcomm. And you guys may have noticed I managed to get a cold, and I'm not. My voice may sound a little muffled, so just be aware if I'm not pronouncing as clearly as I should. You'll know why. All right, so LRCX. So Lam Research, where are these guys headquartered?
I believe near you.
Okay. So these guys are solid, good balance sheet. I'm gonna leave that at 8. They're growing their revenues 20% based on the last 2 quarters. That looks really good. So I'm going to grow their free cash flows by 12% in the first 4 months because I think they're beginning to get into a growth cycle, and the market may not be paying close enough attention. And this might be a nice stock to pick up and ride the stock upward. So free cash flow for the trailing 12 months is $4.839 billion. I'm going to grow that by 12%. And then after that at 4%. Okay. Cash was $6.067 billion. And then debt is $4.984 billion. Their market cap is only $92.37 billion. Shares outstanding are 1,290,000 shares. So it's discounted nicely. The cash flow they produce is really good because those margins, and they're just a good cash generating company. When we look at their forecast, and they have 19 analysts covering the stock, and the analysts believe it's discounted by 34%. So I'm agreeing that this stock is discounted. I'm going to use the FY 2025 number, and it's going to end June 30th, 2025. The earnings per share is $3.67 per share. I'm going to go with a 24 PE, and it's going to grow nicely in 26, 27, 28. Go with a 10% growth rate. This is a good stock. You think about Lam Research, right? The demand for semiconductors is there. They're beginning to have a growth cycle. When we look at the revenue growth, it's projected to begin to start growing. That's good. And I think the compares are really going to start looking good. They close their year at the middle of the year, meaning like their fiscal year ends at the end of June, right? So right now they're working on finishing. They just finished because end of June. Yeah. Okay. So they're finishing in December, their second quarter. So first quarter was good. The next quarter, let's say it's at 20%. That's good. So they may end up with like 20% growth for the whole year. I have to imagine that's going to make this stock rally. What do you think, Enkiter?
If I may add like few cents, first of all, they are not selling to Qualcomm. Qualcomm is fabless. They are actually selling to the fab manufacturers. So they might be selling to TSMC or to Micron.
Intel.
Yeah. And for comparison reasons, they are in the same category like ASML that we know, like Applied Materials, AMAT that you are showing, that actually I wanted to ask you something. And also KLA Tencor, Glock. So these are, I believe, the four major companies that are suppliers to fab manufacturers. So yeah, on the surface, it looks fine. They are also, they are doing buyback. They are reducing their share count over time. I see that their stock-based compensation is reasonable. So yeah, not bad. Actually, what I wanted to ask, if I may, is really to, when you will finish with the companies that Thomas asking for, to check out Applied Materials, AMAT.
Yeah.
Because they are comparable, and that's interests me because I'm investor in AMAT for some time. It also went down, but I'm happily still on the green, nicely. But it can be interesting, maybe to switch next year.
Yep. Okay, so
but their Lam Research performance over 2024. I looked at the chart; they did nothing. I mean, they are like 1 year chart. They started 71, they're finished the year in 71. Not impressive. Better than Intel, but.
Right. Oh yeah, I mean, Intel crashed and burned this year.
Yeah. You see, they went all the way up to 1.
So here's the thing about semiconductor, right? Like, not saying this is going to be the recipe for success, but like, semiconductor companies are cyclical, and so Broadcom is not a perfect example, but I'll kind of show it. See how you had these sell-offs? So you had for a period of time, and maybe so for a period of time, these stocks get sold off, right? And the market's like, yeah, we don't believe in them, right? And they give us a good opportunity to buy into them. Broadcom's a super success story, right? It's doing great. But what would be another one? Like, I mean, Micron is like, holy smokes, this stock is so hard to figure out, right? You got the stock going up and down. So I didn't want to use that example. But I'm hoping that Qualcomm is going to see how Qualcomm goes up, gives up those gains, goes up, gives up those gains. And I'm thinking it's going to go up. That's why I bought it. And the reason I want to show that is this is good for us investors. It gives me an opportunity to buy it, but we got to buy and know when to sell. It's not a space that you can stay in forever. You could, if you're an NVIDIA stockholder, I think you would argue with me and say, no, I bought it 5 years ago and I'm very happy with it. Congratulations. That's an exception. But like Intel, right? Oh my God, it's been a brutal existence of a company. All right, so back to Applied Materials. Let me get rid of this so it doesn't confuse me anymore. Let's take a look at Applied Materials. So Lam Research is good. So
AMAT.
Okay. Okay, so See, they're giving up some of these gains. This is
Yeah.
a little prettier of a graph, but you can see the cyclicality. Investors buy, it runs up, they sell, and you can buy again. So these guys are up 169%. It's a $133 billion company. Revenues there, PEs are low. Analysts are saying it's a buy. And more consistent revenues, you can see that they're beginning to grow. Now, it hasn't been a high growth company for the quarters.
Mm-hmm.
In the past, like in 21, it really grew nicely. 20, 22, really nice growth. And looks good. So the margins for Lam Research were about 45. These guys are around the same. They're peer companies. They kind of do the same thing. And we've got free cash flow. Wow, nice free cash flow. 7.4. So the cash flow looks great.
Look at as I'm also looking for income, the reason that I like Applied Materials sometimes more is look at their dividend growth. It's small, yeah, I know it's 1%, but look at the growth. They are in the last few years they are increasing it like 25% a year. The dividend, and also they are doing like close to 2% buyback, which also somewhat support the stock.
So this, if you believe that this growth is going to get up to 10% or higher, this would be a good stock to buy, because it's really going to the multiple, the PE multiple is going to go up if they grow. Let's see what analysts think. There's 21 analysts that cover it, and some of them are very optimistic, 280. They, in general, believe it's 33% discounted. What I like about stock analysis is they provide projections on revenue growth. The revenue growth for their current fiscal year that they're already in is supposed to be 10%. So the story on this stock is good. If they hit this 10%, the stock's going to rally, because their PE is going to be 16.9. And if they keep growing at these rates, it's going to be a good winner. I think the market's offering a pretty good stock price to buy in at. And if that forecast is correct, this is going to be a winner.
Yeah, there's a question.
I think it looks good. I think Lam, I'd have to say that Lam looked a little better. And the reason I think Lam looks a little better is that when we look at the charts look very similar. Lam and Applied Materials, their charts are pretty similar. Look at that. They're just following each other. Look at that.
Yeah, they're the same industry. They're supplying to the same companies.
Yeah.
Yeah.
So when I look at the number, or I guess the how the stock is setting up, the reason I like this one a little more is you see this red on the screen?
Yeah.
If you don't dig into that, you're like, oh, this business is doing poorly. So maybe it's sold off a little bit more, which is the case, right? It hasn't performed as well as Applied Materials. So there's a little greater discount. But the turnaround, if we believe this quarterly number, and they grow at 20%, that's double the growth of Applied Materials. So the turnaround is going to be like, whoa, stock market surprise. And there's a lot of investing into Lam Research. It's also a lower cap. So I think we're looking at two good companies. But I'd probably buy Lam Research. And it is going to be, I'm going to put both on my watch list, but I'm probably going to buy Lam Research in 2025.